Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, on one mutual fund per video to share how an individual investor like you and I can try to find out more about a mutual fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I am not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the JPMorgan Global Select Equity Fund. Now, the first thing we need to figure out as an individual investor is where can we obtain information and documents on the fund. JP Morgan is a gigantic financial institution, and its asset management business is well established globally in many countries. The JP Morgan Asset Management website does have a Singapore personal investor version to allow anyone to find the necessary offering documents and information available for funds offered to the Singapore retail market. The website is, however, not too friendly when you want to dig a bit more to understand the fund better. For this video, I had to also explore the US and Europe versions of the JP Morgan Asset Management website, and also dabble with non-personal investor settings in order to get more details on the fund. Perhaps JP Morgan has grown so large that its business entities in different geographies work more as silos instead of collaborating with each other for the greater good of investors. FundInfo is a global third-party consolidator and service provider for fund data and documents, and has information on at least 90% of the mutual funds offered in Singapore. So if there is a need, we will be checking the information on FundInfo as well. You can of course also get some information from your distributor, which is your bank or online platform that you buy funds from, as long as they have the fund on their offering list. And finally, the web is always readily available, waiting to answer your search queries. Before we go through the fund details, let's spend a quick moment to understand who the fund provider, JP Morgan Asset Management, is and what they are good in. The parent company, JP Morgan Chase, is a financial institution giant with 225 years of history and has businesses across individuals, corporations, governments, and institutions. With a great business track record, they are one of the highly sought-after companies to work in and to invest in. JP Morgan first established office in Singapore back in 1964, and today, JP Morgan's business in Singapore covers almost the full spectrum of financial services, with the key exception being retail business. Asset management is one of the key businesses for JP Morgan, not just in Singapore, but globally. With over 2.4 trillion US dollars of assets under management, JP Morgan Asset Management, or JPMAM, on its own is a force to be reckoned with. JPMAM today has over 1,160 specialists, covering over 600 strategies, though the funds available to Singapore retail investors are a small subset of that, as many of the strategies are catered for institutional and sophisticated investors. The strategies managed by JPMAM are well diversified across different asset classes, which serves to evidence that the firm is ambitious and capable to create and provide investment solutions of all types to cater to investor needs. This also translates to a well-decorated wall of awards for JPMAM. Now let's talk about the strategy of the fund, which is supposed to be the most important aspect of a fund so that an investor can understand what the fund is trying to do and how its performances are achieved. JPMAM unfortunately massively under-delivered in this area for retail investors in my view. Let me explain. The first place I research is obviously JPMAM's Singapore Personal Investor website. There is only the overview section of the fund-specific page that provided some write-up about the fund strategy as seen here, which is worded a bit more for marketing purposes. Nevertheless, what I can gather is that the fund is essentially a core global equity portfolio that is style agnostic and quality focused. The strategy is based on fundamental analysis and is heavily data driven, and it combines top-down insights with bottom-up stock selection. The outcome is a high conviction portfolio of 70 to 100 large cap positions. Beyond this, I was unable to find any further elaboration on the fund strategy. I also feel the all-weather term is kind of over misused by fund providers. I ventured into their Europe Qualified Investor website and found that there is an additional document in their fund-specific page that is called Fund Story. This document provided a bit more insight on the stock selection criteria, which is based on premium and quality indicators, and with attractive valuation, high business quality, and predictable future earnings being three important factors to consider. This is supported by graphs showing the fund having significant overweight on the factors that they look at compared to the broad MSCI World Index. The document also shrunk the portfolio conviction size to 65 to 95, though that is not far off. There is also a perspectives article by one of the fund's portfolio managers published in June 2024 that is found only in the Europe website. In the article, the manager covered his views of the markets and also provided a nice chart showing how the top-down view of the market works for them and how they plan for top-down adjustments to the fund's portfolio, which I think is very helpful. I then of course had to explore their US website to see what else I was missing out on. Interestingly, JPMam decided to launch an ETF in US instead of a fund for this strategy. Nevertheless, there is again a different approach to present the strategy, this time clearly separating the responsibilities of the research analysts and the portfolio managers. The ETF fact sheet also provided a clear, yet slightly different, description of the strategy, this time clearly specifying the strategy is intended for long-term capital appreciation and as well mentioned strong free cash flow as one of the stock selection criteria. So here we have it. After browsing through the different websites of JPMam, we have a better understanding of what the JPMorgan Global Select Equity Fund is trying to do and what investments it is looking for. Wouldn't it be great if JPMam can combine all this different information and details in a nice retail investor document and publish it in all their websites? Knowing the fund strategy, let's see how it translates to the actual portfolio of the fund. I will be extracting information from the accredited investor version of the fund fact sheet, as it contains much more details and statistics compared to the retail version. The fact sheet is dated end October 2024. The JP Morgan Global Select Equity Fund uses the MSCI World Net Total Return Index as the benchmark, which is pretty common for most global equity funds to benchmark against. Looking at regional breakdown, we can see the fund currently has overweights in Europe and Middle East ex-UK, as well as emerging markets, while the main underweights are in Japan and Canada. This suggests more opportunities available in the overweight regions, presumably due to these markets having moved up lesser than, say, Japan and US, and therefore are potentially more attractively valued. Sector-wise, the biggest overweights are in retail, financial services, and utilities, while the biggest underweights are in industrial cyclicals and pharma. Again, this reflects the views of the fund managers, and I think some adjustments have already been done to get in alignment with the results of the US elections. The top holdings are, no surprise, dominated by many of the hot tech giants, which is inevitable given their high proportion in the market index. As the fund is large cap focused, majority of the holdings are above $100 billion market cap. Portfolio statistics look quite decent, especially on the 3 years where the fund has a lower beta and higher alpha, while maintaining nearly fully correlated to the benchmark. All in all, there is nothing really out of the norm in the fund portfolio, which suggests the fund managers play it safe and rely on the capabilities of the research team to try generate outperformance bit by bit, but consistently over time. The fund is now over 10 billion US dollars in size, which is also a bit too large to try an extraordinary bet in its investments. Finally, as with most established fund providers, JPMam provides a decent fund commentary but covers more on specific stock comments, such as why overweighting a certain stock helped in performance, or why avoiding a certain stock helped reduce losses. For market commentary, it is best to refer to their quarterly guides to the markets material and other frequently published market updates. The JPMorgan Global Select Equity Fund is currently co-managed by Helge, pardon if I pronounced the name wrongly, and Christian, who look like they spend most of their entire work life in JPMorgan, which is a good thing as it suggests they are happy with the firm. This information are from Europe website, by the way, as the Singapore retail website strangely doesn't show their photos and bios. Helge has been doing equity research for different regions for 36 years and is currently the CIO for the research-driven process for international equities. And with a quick check, he seems to be co-managing several global equity funds and strategies. He took over the JPMorgan Global Select Equity Funds 8 years ago, which means we should ignore the fund performance prior to that, as there is not much information on what the fund strategy was in the past. In any case, 8 years is a decent track record to evaluate a fund's performance. Christian has also a similar CV, having done equity research for 26 years, and is currently the head of Developed Asia Research. A quick check shows that he seems to be currently managing only the Global Select Equity strategy, which perhaps gives him more airtime than his partner, as I see Christian appearing more often in interview articles and videos. Christian started co-managing the JPMorgan Global Select Equity Fund 5 years ago. In JPMam, the responsibilities of the fund managers and research analysts are more clearly divided. Helge and Christian are supported by over 80 research analysts who cover more than 2,500 companies globally. They in turn are responsible for deciding the specific stocks to add or remove in the fund portfolio with consideration of top-down macro assessments. Having managed the fund for 8 and 5 years respectively, they must be doing something right, as the fund performance has been decent, which we will cover in a while. Now let's take a look at the share classes available for the JPMorgan Global Select Equity Fund. On the JPMam Singapore Retail Investor website and in the fact sheet, there are 4 share classes listed. The A Accumulation US dollars, A Monthly Distribution US dollars, A Accumulation Sing dollars, and A Monthly Distribution Sing dollars. Additionally, in the PHS, there is yet another A Accumulation Sing dollars hedge share class listed, which appears to be inactive and not yet launched. As you probably gather by now, A is the alphabet for retail share classes for JPMorgan mutual funds. As per the fact sheet, the original Accumulation US dollar share class was launched in 1981, and the Accumulation Sing dollar share class in 2018. The 2 monthly distribution share classes were only recently launched in July 2024. Now, considering the fund strategy is long-term capital appreciation, it makes no sense to go for the distribution share classes at all, as the organic dividends from underlying holdings is likely to be low. So if these distribution share classes give a high distribution yield, it will mean that your capital in the fund is compromised. Currently, both the distribution share classes are paying out only about 1.2% to 1.3% yield. If for whatever reason you would like to go for the distribution US dollar share class, do note that the fund also has a yearly distribution US dollar share class that you absolutely should not mistakenly invest in. This is because this share class is a troll that hasn't paid out any meaningful distribution for years. Other A currency share classes available include Euro, Sterling, and Swiss franc, though these aren't registered for Singapore retail investor usage. In terms of fees, for A share classes of this fund, management fee is 1.5%. Given small differences in other expenses, the TER will come to around 1.74% to 1.82% for the different share classes listed here. This is similar to most global equity funds in the market. Next, we will look at the fund performance. Given Helge took over the fund about 8 years ago, we will look at the data since 2017. Additionally, the Sing Dollar share class was only incepted in 2018, which means we will have to look at data from 2019 onwards. Calendar year data is not available in the Singapore website, by the way, so I had to refer to the Europe website instead. On annualized basis, the fund has done well with about 1.5% outperformance in the past 5 years and 1.8% outperformance in the past 3 years. If we look at calendar year basis, the fund has only underperformed in 2018, 2019 and year to date, which is a pretty decent feat as well. The out and underperformances are not significant at within 3%, which is, as previously mentioned, shows the fund strategy is more about performing consistently over long term instead of trying to go for big bets. The decent statistics after Christian joined as co-manager about 5 years ago also suggests that he has helped to improve the fund performance, which is good. Looking at the Sing Dollar share class, which is unhedged, it is also good to see that the performance numbers have not deviated too much from the US dollar share class numbers. Hence, investors with Sing dollars do not need to worry too much about FX fluctuations messing up the intended returns. The JPMam website also provides a dynamic performance chart that allows us to generate the chart from 2017 till date as seen here. There is also a dynamic NAV chart available. These are pretty nice free tools that are not commonly available in other fund provider websites. Finally, let's summarize our findings and start with the good stuff. JPMam is a well-established fund provider in Singapore and globally. Its parent, JPMorgan Chase, is even more reputable and therefore there is little worry needed on the stability of the firm and the resources provided for the success of the business. The two co-managers of the fund are very experienced, with probably their entire decades-long career involved in equity research work. The fund strategy, as per what is available, is generally straightforward and similar to what many other global equity funds describe themselves to be doing. There is nothing that looks alarming for the general retail investors. Fund performance has been good in the past 8 years, with overall a strong and consistent return that slowly outperforms the benchmark over the long term. The Sing Dollar share class performance is good enough for Sing Dollar investors as well. Let's talk about the bad and the questionable stuff next. I can't help thinking there is more to be uncovered and understood for the fund strategy. Part of the success of the fund's performance has to be attributed to the good outputs from the research team, but there is not much write-up available on this. I think if there is some area in the strategy that the team is doing better than most other funds in the market, it would be good to flag it out as a marketing angle, which can help to attract more investors to the fund. Finally, my biggest gripe during this video is the inconsistent availability of information and documents across different country websites of JPMam. If I were a less savvy retail investor looking only at the Singapore Personal Investor website, I might have missed out quite a lot of information that would make the fund more attractive to me. Hopefully, JPMam can improve in this area. This concludes my absolutely biased comments on JP Morgan Global Select Equity Fund. Would you invest in the fund or give it a miss? Or are you already invested in it? Do drop a comment to let me know what you think. Additionally, if you find this video useful and would like to see more related contents, please click on like, subscribe to the channel, and share this video to your friends. Thank you and have a great day.